Hello, Matthew. I realize this project is extremely overwhelming and voluminous. And this video is to help you complete the project and earn a satisfactory grade. I do want to say that you have a lot of good information, so reconstructing your workbook is not necessary. We just have to fix some errors that we have that I have identified. What you see in front of you is your particular Excel spreadsheet that you provided to me via Brightspace. And what I'm going to do in this video is try to help you correct some of these errors and help you think about the journal entries in a different way that will make creating the debits and credits a lot easier and make more sense. Okay. When you think about this entry here, this entry should not have been touched at all. It was given to you at the beginning of the term, and that entry should not be touched at all. The second entry is recording the purchase of baking supplies on credit. Now, when we talk about accrual-based accounting, we're thinking about we have to recognize an expense when incurred. We have not incurred an expense here because we haven't used the asset that we purchased. We are simply purchasing the asset on credit. The asset in this case is called baking supplies. So when you see baking supplies expense, you have to assume that you've used them. And you have not. In this case, you have not used them, you only purchased them. So we are debiting, increasing the asset and increasing the liability, in this case accounts payable. The next entry, if my memory serves, is the receipt of cash, which you've got dead on correct, absolutely correct here. But you didn't complete the entry. It says you were borrowing money or a note for $10,000 at a certain level of interest. So you'll have to record the note. And if you don't know what account is appropriate, remember it's a liability, so you have only 4 options to choose from here. You have the note payable, the accounts payable, the wages payable, and interest payable. And because it specifically told you it's a note, it's easy. Now we know it's a note payable. We are only going to show the note payable at the point of the obligation. This is how much we have to pay as of today, July 3rd. The next entry causes some issue here because students are like, well, we're paying, how much are we paying? Well, in this transaction, you signed a lease and paid 1 month's worth of rent for July, and you paid the next June month's rent, the first month and the last month. Well, June's rent is not an expense because we have not used it yet. It's an asset. In this case, we prepaid that rent. It's almost like a security deposit, but not necessarily the same. We're going to apply it to our next month's rent. So you prepaid the rent. Now, what did you pay it with? Well, you paid it with cash. You wrote a check for $3,000, paying 1 month's worth of rent and rent for the 10 months in advance. So that is what you need to record here. Now, this entry here, again, is not complete, but you have some good information. You recorded a business license expense, but you paid cash with it, so I don't see cash. The same here. You purchased an office supplies, which is absolutely correct, but you should be taking that and posting it here. It's a debit to our office supplies asset, but you paid with cash, so I don't see cash here. Now, common stock. Let's make sure. I don't know if that's right. There are 2 entries. One is the common stock for equipment. Equipment in exchange for stock. So you have to increase the equipment asset and increase the common stock equity. So that's another entry that you really need to think about. It's not something that happens all the time with businesses, so it's not a routine journal entry. But if you listen to the clues that are given to you in these transactions, you're better able to create an entry that's balanced and accurate. So it already told you that you received common stock, so you know it's common stock. But common stock is an equity account, and we remember common stock equity accounts, liability accounts are increased with credits. So we need to keep that account, but we need to credit it. And we purchased the common stock not with cash, but with equipment. So we have to show equipment going up as an asset and our common stock going up as an asset. Now, this particular entry here on the 16th or the 14th of July, you're purchasing office supplies. But remember, assets you purchase do not become expense until they are used. And you will record that in your adjusting entry. So I'm going to highlight this. And I'm going to also say, where is the cash in this entry? The same is true here. Wages payable is a good account, but remember, we have to show the use of our employees. The use of anything is our expense. Show the use of employees through wages expense. And then we have to increase our liability. In this case, our wages liability. This account here, it looks really good. When you receive an invoice for your telephone service, you have to show we actually use that service. So we're going to have to show an expense, and that's good. $75, debit and credit, same number. The only thing is we didn't pay for it yet. So you have to show a liability. So in this entry here, I want you to see that we have to incur an obligation. Where is the obligation? If you don't know what obligation is appropriate, go back to your chart of accounts and use some deductive reasoning. No payables does not apply, interest does not apply, wages does not apply. The only thing that fits is accounts payable. And the same here. You purchased a policy in advance. You paid it. Paid in advance. This is an asset, a prepaid asset. And then where is the cash? Because you paid for it with cash. So this entry, now although you have interest expense, and I'm saying it's incorrect, when you use that money or that insurance policy as time progresses through the policy period, you will reflect that insurance expense and you will show it in your adjusting entries. So for now, show a prepaid and cash. Same with this entry here. You're going to show the wages that you have. Well, actually, this entry doesn't need to be recorded yet. I'm going to put here, do not record until the end. This one here, do not record until 7:30. So no entry there. Now I want you to see that. So in these comments, I'm just trying to get you to see that the entries are relatively straightforward and they give you so many clues. Okay. Now in this entry here, again, the receivable is debited, wrong amount though. So I'm going to highlight that amount because that amount looks like it's incorrect. But you also have to show the cash received and the total amount of revenue generated. So again, your revenue should be increased here with the total amount. Your cash that you receive should be increased, and your receivable in this case should be increased. Now, if you follow these steps here, the same entries pretty much are replicated here. When you pay the bill or you pay your employees, you're going to show where's the cash. Cash paid. Here, when you receive monies from your clients, you're going to receive cash. And you're going to reduce the accounts receivable. Phone expense does not need to be recorded here. What's going to happen is you're going to show the payment. Show only the payment. This expense was already recognized. And I'm going to highlight the rest of these because they're pretty much a duplication of what we talked about before. The only thing here that I want to make clear is when you're paying your wages, this here should be accounts payable. And here, when you're doing your revenue, I'm going to undo that. Your revenue entries. I just want to highlight these. And the same will happen in all of these entries here. Where's the cash? Accounts receivable should go down. And cash up. Phone expense, again, as I mentioned before, you're not recording the expense, you're removing the obligation, and you're reflecting the payment of cash. Same thing here. You don't show your expense because you haven't used the asset yet. You're going to show it as an asset. And these entries here pretty much are the same problems I've noticed in the previous months. Now, when recording the transactions for inventory, all you need to do is copy these entries onto your journal entry September and the corresponding blanks. That's all you need to do. Okay. Now let's get to the last part so that you can proceed forward. Enter the entries. Once you've got your entries recorded, you will post them here in the trial balance or in the T accounts. And remember, these T accounts are auto filling the values that are here. So it becomes quite important that you not only utilize the spaces as appropriate, but you don't manipulate these totals here because they're going to be actually auto filling our trial balance. So I won't say much about the T accounts because your entries are not complete yet. But I will say for your adjustments, when you're creating your adjustments for your interest, you want to record the principal multiplied times the rate multiplied times 3/12. For your insurance, all you want to do is take 2/12 of the $2,400. That's going to be your expense. For your office supplies, you're going to take your unadjusted balance, subtract the amount on hand, and that will equal your adjustment. And this is the same for your office supplies as well as for your baking supplies. I hope this video does give you some clarity as to how to approach making the adjustments that you need. But if you have any additional questions, please reach out and I'll be more than happy to help you.